Welcome back, everyone, to the Passive Road to Retirement podcast. We're your hosts, Andrew Jarrett and Nick Cooper. Today, we're joined by Jeffrey St Arromand, a Brooklyn native and a 3-time national level Emmy winner. Jeffrey holds a bachelor's degree in broadcast journalism from Florida A&M University. He's fluent in French and exceptionally well-traveled. His interests include working out, going to museums, and spending time with family. Jeffrey is an award-winning sports television producer and leading partner of the successful Tricia Lee Team with over $300 million in sales. Jeffrey, welcome to the show.
Thanks for reading that bio there. I almost impressed myself. Thanks so much.
That's funny.
That's great. Well, great to have you on. Could you give us a little bit of background, kind of how you went from, your story television, now into currently real estate?
Yeah, I mean, for me, people always ask about that transition, like where's the parallel? But essentially in television, you're a storyteller, you're producing, and that's if you really look at it, that's the genesis of what it is in real estate. You're storytelling, whether it be you're selling a property, or you're producing the entire transaction from soup to nuts, and that's where the parallel lies. But when I was in television, I always had interest in real estate. And in fact, there were times when I got my license and I was in edit rooms and actually working on deals and trying to broker deals, which we were doing just before we got on here. So I kind of saw the writing on the wall with the direction of where television was going, knowing that I was a what's called a permalancer. So you go, okay. I worked for CBS, NBC, TNT. And you get paid considerably more than staff people, and knowing the corporate world and where they are, they want to try to, I wouldn't say not cut the fat, but just actually have younger people, newer people, less experienced, and pay them less. So knowing that, I was like, this may be the right time, and it was after the the previous recession, so that was a good time then, and I decided to jump in all the way. And one thing that I think is really important that helped with the transition for me is really having great coaches, because I wanted to have the same level of success that I had in television and have that in real estate. So I immediately, invested in some great coaching, everyone from, Tom Ferry, Buffini, Ninja Selling, and even here now what we're doing at SERHANT with Seller Like SERHANT, and doing that. And now I'm actually one of the, I guess you would say, a speaker at the event, and working with a lot of people who are doing the same thing. So, and then also once I ultimately got into the real estate space, I'm a big follower of Gary Vee, and, he was a big proponent of content. I thought to myself, well, I'm always behind the camera. Now I'll just reverse the roles, be in front of the camera, and use great content to really propel what it is that I'm selling. And I think that was the way of bringing in both worlds, and that's how it really worked. Because oftentimes people are wondering, well, geez, how do you go from going to a Super Bowl to, doing a final walkthrough in at a great property? So that's where the similarities were, and I think it's led to great success.
No, I think that's a great answer. I kind of want to peel back a bit. You mentioned about the storytelling aspect of how you do things. How does the story sell, like, what you're doing? Like, what is that aspect of it? There's a saying there that facts tell and stories sell. Like, people buy a lot with emotions, not with facts. So can you kind of expand upon that?
Yeah, absolutely. I think a lot of times, I'll go in two directions. One, when it comes to a property that needs work, people don't really have the vision. So they need someone to really give them the vision on how the home will ultimately feel, and how they can see themselves there as a future homeowner. That's one piece of it. Now, separately, when you have a trophy property, and people, and I would say this, people just don't buy the property, they buy into the neighborhood. And so that's what we really look to sell. So you could envision yourself going to the great restaurants, going to the great parks, seeing the great details of the property. So once, and quite frankly, that's happened, I want to say 2 times last year in a property that I was selling. We did 2 great videos, And the seller, the ultimate buyer, came in because of the video. And they said, when I saw this and I saw this neighborhood and I saw this great place, I knew that this was my home. So it's something that is really effective because a lot of times people don't have the vision. And so they need to see themselves enjoying the property, see their family there. And oftentimes they may bring in some extras and have kids playing or running through the property. One time I featured my daughter and her friend in the property, so detailing the rooms and everything. So people really can see themselves there. And that's how it really helps. That's how it really helps.
No, I think that's a great way of explaining it, is that you have to help paint that picture, because a lot of folks, especially they're buying, don't have that vision. So that's where you come along as the storyteller. So thanks for that.
Yep.
Yeah, no, absolutely.
And you're right, a location plays a big role. When we look for multifamily buildings, we're looking for that stuff too. How far is it to grocery stores, to Starbucks, what's around there for our tenants. So that's a great point.
And to that point, and I'll pivot a little bit when it pertains to, developers that I work with. It's the same thing. Like, a lot of developers, they do their own due diligence, and I would say sometimes they think they know their neighborhoods, but I know, with whether it be other properties I've sold or buyers that are going out, you may have a hot neighborhood, in location A, but just adjacent location B or C is going to be just as hot. And it may not be the same inventory, but if you as a developer do the same, your quality of renovation, and you can bring that buyer out and you let them know, hey, you have all the same resources here. You have the great parks here. This may be a different price point that you're priced out of, but here's the next neighborhood. And then you can start to set the price points there. And I've done that in a few neighborhoods that really weren't that hot. And then as people started to really expand their latitude of where they want to live, they say, hey, this is something I'd consider. So it also works with, end users and developers as well.
Hey, everyone. Hope you're enjoying this episode. Are you ready to maximize your real estate investing to its full potential? Send an email to andrew@jarrettcapital.com and take your life and business to all new levels. That's andrew@JARRETT capital.com. So what could somebody do to kind of get that deep market research? Do you have any things that you look for, for developers that are like key indicators that you want to develop there? Or what can you share with that?
I think one thing I always tell people, when you see a Starbucks popping up, that's a pretty good sign. That's number one. But no, I mean, for me, you really start to, typically what happens first is the commercial corridor starts to change. And that's a pretty good indication of what's going to happen in the neighborhood. Because, initially the buyers come first and then the renters come. So as a developer, you're thinking, okay, where do I want to go that I'm seeing, the commercial, the commercial corridor changing a little bit. We're close to transportation, because that's really key in New York, relatively close to transportation. You have some parks and stuff of that nature there. Those are the small things. And one thing that someone told me a long time ago that I think was really a great gem. When here in New York, we have a great, transit system. So I don't take the train as much now, but in the past I would take the train all the time. So whenever I start to see like younger, I guess back then we Gen Z or whatever generation folks coming off on one stop, when I see that, I go to the next two stops. I know those are going to be the next hot spots. So then I'll get off on the two stops from later and start to check out the neighborhoods there, because those renters, where they are right now, those price points are going to increase, and then they're going to need to move someplace else. I mean, I've seen this happen in New York. Like there's a place, you guys may not resonate with you, but in Brooklyn, there's a Fort Greene was like really the hot artsy area, Clinton Hill. And over the course of, 5 to 10 years, all of those, and everyone there were renters, all of those renters were priced out. So then they had to then move to Bed-Stuy. And then Bed-Stuy became the artsy, freelance, creative space. So seeing those things, and that's the type of insight that I provide, and any good broker should provide to the developer, because they have their boots on the ground, but they're not really there and really know what's going on in the streets. And that's the insight. That's what I look to provide.
Okay. I think it's great insight of how you put that all together, putting the point A to point Z and all those spaces in between. How now, kind of shifting gears a bit, how do you what are you working on right now as far as it's obviously when we're talking right now, it's March of 23. It's not March of 22. So what's working for you now as far as putting deals together?
I think what's critically important is aligning. Okay, let's say on the listing side, what's critically important is aligning yourself with great mortgage brokers that really have creative financing solutions, because and I'll break this down to various price points. So if you're, and I have to put an asterisk here, because when I talk about affordability and I talk about New York, it's almost insulting to say when you're like under $1 million, when something at 900,000, that deems to be more affordable. In other places, that's a mansion. So a 900,000 price point property, those type of buyers, I would say actually up to maybe 2 million. Those type of buyers are directly impacted by interest rates. That where are we at now? On a hinge of like 6%. I mean, it's always hovering up and down. Maybe we're back down to 5, hopefully soon. So as a result of that, you have to have mortgage brokers that could educate these buyers on, 5, 7, 10-year ARMs, interest only, 15 year mortgage, rather a 30-year, buying down points. Like, so all that information is critical. That's what's really helpful now. And then when you go up to the luxury market that's like 4 million or higher, those buyers aren't necessarily affected by it. So it's really the product and the location. And then it all goes back to what we talked about before, the storytelling, and that's what's really important for those buyers to see themselves in the property. And most importantly, we have the volatility of the stock market right now. And in New York, there's one thing that remains the same, is that I'd much rather, and a lot of investors are that way or this way, they'd rather have their money in a real property as opposed to the fluctuation, that's happening in Wall Street. And they know over the course of a long term, if you give a quality property and a quality location, you're definitely going to get the appreciation there. So that's what's really been working with me is, mortgage brokers, creative financing, and I hate to use the term trophy, but trophy properties that really attract buyers that are looking for an investment piece that's safer than the stock market.
Yep, I totally agree with you. We prefer to have our money in real estate as well.
Yeah,
no doubt about that.
Well, good thing no one here is talking crypto, because that could be that could be a little problematic.
Now, you also invest in real estate as well as sell. We were talking before the show. You have some Airbnb properties. What do those investments look like, and how those come together?
I mean, a lot of those came about because of me being in the field, and there's oftentimes, what I think is one misstep that a lot of real estate agents and brokers do is not really moving aggressively on something that they know there's a great deal. Even if you don't have the financial wherewithal yourself, use that sweat equity. Bring people in, and they could be a part of the investment group to purchase the property. So what happened with me is I saw a great property. Actually, it was my wife that's now I'm on her team. She found a great property. Said, "Hey, we should just move on this," and that's how we found our first Airbnb. And then obviously there was some work involved. We had to do some underpinning in the lower level to really get the ceiling heights going. So we did that and did some renovation, and that's paying off. And then there was another property that a client reached out to me about, that their dad was a little bit over their head and wanted to take on a renovation job, and he was much older and should just be back in San Diego relaxing, as opposed to trying to be a general, oversee the whole product. So I jumped on that, and that became a great property. So I think that's really how whenever I hear anything, I reach out to my developers as well. But if it's something I think is a great deal, I jump on it. I jump on it myself. And one other thing that I also do, because I'm around a lot of high net worth clients, oftentimes I have relationships with developers that really do ground up development, and they're looking for, investors. And so they may give me a stake of a share and say, you know what, Jeff, you go and find, and you just deal with them directly, and I'll deal with you. But you bring people in, And, whatever you want to divvy that amount, for each slice to them, that's fine. But I'll give you this portion and you take care of that. And then that's where I can bring something. And then also that brings great add value to the developers that want to invest. And these are people that I trusted, not contractors, trusted and developers that are doing these projects that I know, obviously we have pro formas and we present all that, and I'll show what the return and the timeline is going to be. And, that's a great way of having myself involved. And if I don't want too much skin in the game, but getting other people involved as well.
Sure.
That's a good point. Is like always bringing value, always bringing value to the equation. It doesn't have to always be capital. And a lot of times, like you mentioned, like it sounds like connections for you is a lot of value that you provide, not just the capital. Just rewinding back a little bit, what is a good deal for you like right now in this market? Like what are you kind of looking for as far as like returns, like high level?
I mean, we're looking for, really, it depends on how. The big factor for me is the turnaround time and how long, we have the renovation time, how long is that going to be, and I'm not certain how it works in your market, but for us, we have Department of Buildings, which is slow things down with permits and with everything else. So we're looking for projects that's what I'll call like an alt 2, which is just changing the existing layout. If it's a 2-family, leaving as a 2-family, so that way we don't have a lot of work to do. You can turn it around quickly, and looking for at least, I would say, at the minimum, $200,000 to $300,000 return after closing and everything else. So that's really what we're looking for. That's a lot of what the developers I'm working with look for as well. And then every once in a while you hit a home run and you find something where you have a pretty low acquisition cost. I mean, and once you do the renovation that it can get up to $500,000-$600,000 return. So those are the grand slams. But I always tell the same thing I tell buyers that I work with, investors that I work with. You don't have to hit a home run every time. Some good solid singles, a couple of doubles, a triple here and there, and you get 3 or 4 homers throughout the year. Those are good numbers.
You have to step up to the plate. You're not going to put in, runs on the board unless you go up to the plate and do it. And a lot of folks, I think, out there are paralyzed with like, oh, how do I do this? How do I start? So going back to, you mentioned in the beginning about coaching. Mm-hmm. How does that affect you in a mentorship?
I mean, that was pivotal. That was pivotal because, I came in, and I'll say this to anyone else here that's watching and listening that might be new to the industry. I came in having a general understanding of the process, but really not knowing it well. And I think especially now, as an agent, your knowledge and your add value that you provide is not, chauffeuring people around to different properties or at all. What really comes in is the number one, making sure that client understands the transaction in and out. And that's really what the coaching process helped me with. And the add value that you brought, because right now consumers do they really need agents? Because they can get all the information online. But how do you decipher what's really important? There's almost too much information. And so with the coaching, that really helped me to determine like what's really relevant, what's really important. And then separately, really looking inward at myself, it allowed me to create systems. I think systems are the most important things, because once you have those systems in place, it's all about, because frankly, you guys say this, more than I will. Like, this isn't brain surgery what we're doing here. It's just a matter of understanding the formulas, having your systems in place, and being able to pop in everything and determine if does this work for me or not. But the key thing is having those systems in place. And coaching was really important in helping me to really establish that. And I think it was pivotal in my growth.
No, I think that's expanding upon that is that you are paying for someone else's mistakes. So you are either going to pay a coach or a mentor to shortcut your timeline to get to that A to Z, skip a few of those letters on the way, or you're going to pay in the streets where it's a lot more expensive.
Absolutely. And I tell people that all the time. All it does, it just, expedites that learning curve. And that's the whole reason why I did it, because I knew I had a learning curve coming in, but I also knew I had a skill set that was different from everyone else. So, and to bring it back to SERHANT, that's why it was important to come here, because coming here, we have, I'm in our podcast studio. We have a full studios team, that's able to help me execute these things and the caliber of that. And so it was just a matter of expediting that learning curve. And these great coaches, I mean, look, if Michael Jordan and LeBron James have coaches outside of the regular coaches that they have on their team, right. I mean, I think I could definitely afford some additional help on my own. So that's the way I really looked at it.
No, I think it's very important to keep in mind that there's so much noise out there. And I think there's so much, like, all the stuff is out there on YouTube. Can you find it all? Yes, but which one should you follow? And how do you replicate that? And I think, like, you made a great point there. Like, Michael Jordan has a coach. Tiger Woods has a swing coach. Like, all these folks are not just like, I'm an expert and I stop. No, they have coach. They're there because of that high level coaching.
And the thing that's really important, not only having the high level coaching, but making sure that you're coachable. That's the key. Because not being coachable, you could hear something every day, and until you bump your head against the wall, and until you have that huge issue where you realize, shit, I should really work on my CRM, or I should really reaching out to people constantly, let them know what I'm doing, where are my newsletters, where certain things that they seem so redundant and so tiresome, but it works and has been proven. So why try to reinvent the wheel? You may want to tweak the wheel a little bit, but don't reinvent it. Everyone's gone through it. So save yourself the heartache and listen to the mentor or the coach that you have.
Yeah, Jeff, that's the knowledge bomb dropped right there. The golden nugget was be teachable. I think that's something for everyone to keep in mind is, hey, you read all these books, right? Did you take any action on these things that you learned, these concepts? Because if you did not, this was just really bad entertainment. You may have Netflix, like, hey, you read this great book. Did you do anything with it? Did you do the exercises? No, then why did you waste your time doing it? And the same with what you said as far as your mentor's telling you to do something. If you didn't do it, then why are you paying for this?
Yeah, completely. And then that's why I'm always leery when someone says, "Oh, I did, I took, this class from this guy, he was awful," or, this didn't work. You really gotta, you gotta look in the mirror and see, are you really committed to doing the work? The results will come if you commit to doing the work. And I'll say this, they're not gonna come right away. If you're looking for like instant success, wrong industry. It's not happening. But if you, deal with the ebbs and flows, and you have your systems in place, and it's just a matter of time, and then when it comes, it's like the faucet that opens up, and it's gonna all come pouring in. So you just have to be prepared for that. And that's really one thing I really got from all the coaching, and it's really led to some good things, and hopefully even better things in the future.
Yeah, and you brought up the baseball analogy is like, if you're one of the best hitters, you hit 3 out of 10 balls.
Exactly. Right.
So this is not you hit 10 out of 10, this is 3 out of 10. And this is business. It is a lot about numbers and getting up to that plate and taking those swings.
No, I couldn't listen. And the other thing, staying on that baseball analogy piece, when you get to the plate, you want to start taking some swings. Don't sit there and take all the fastballs and get struck out. You want to make some contact. And so, and in this market, what's happening now, and you mentioned it earlier, in this market, people are just, they have that paralysis and they're not doing anything. And so, interest rates are too high. Well, what are you going to wait for them to go down so that everyone else that's been on the sidelines is going to come in and you overpay for the property? Right. So it's like, what can you do right now to take those swings, to take advantage of the quote unquote downturn? Because whenever there's downturn, there's always opportunity. And that's one thing that I tell people all the time. You can wait. Yeah, sure, wait. And then we'll talk months later and you'll see, or 6 months from now, and you'll see what happens when everyone else has been waiting, is ready to go. So it's like, you just got to be aggressive when the opportunity presents itself.
So if I'm a new investor now, what would your one piece of advice say? What would it be to me if as a new investor?
As a new investor, I'd say
right now, on March 2023, how would you say what I should do?
There's a lot of, and with investors, it's always a little tricky because there are a lot of people that are in dicey situations right now because of, the past that we've had. But a lot of people want to get out of those situations. And right now you can be very aggressive as an investor. But what's key is to determine when you're doing your numbers, to be very conservative on your projections, because right now, if you're being too aggressive and you list something too high and you're anticipating, and you spent a lot of money in your renovation costs, expecting a big return, but yet the market is telling you, otherwise, you need to consider how much you're going to put into your renovation and what are you looking at your price point for your return. Because yes, you could be aggressive, but know that return is not going to be what you anticipate it is in these current terms, in these current times. And, we don't have crystal balls. So I'd rather be conservative now and beat that number until we're in a place where we're definitely on the other side. And then we could be a little bit more aggressive. But for my investors, I'll tell them, look for those great properties and let's start, let's start and have stuff in that pipeline to be ready to go. And that's what's been happening for, right now on both the investor piece and even, buyers and everyone else. People are being aggressive because they know the opportunities right now. And so when the market, it's best to be prepared for now. So when the market shifts, you already have your inventory out as an investor, as opposed to trying to play catch up, in 6 months, hopefully, wishfully thinking 6 months from now, when interest rates stabilize and we're at a 5% and I think that hopefully is the norm, 5% in the near future.
Yeah, you time the bottom, you're going to miss it. Everyone else making offers. So it's like you can offer on the down and the up. So if the deal makes sense now with the current interest rates, you offer on it.
Yeah, absolutely.
But you make sure you can offer on that and it can weather this storm.
And the one thing you said that's really that really resonated when you said time the market, that's the problem. Too many people are efforting to try to time the market. And that's the worst thing. You can't time the market because you just simply can't. Who knew COVID was coming?
You can't. Every guru that you follow has been 100% wrong on most of the predictions. No one predicted that this interest rates that would happen like this.
Right.
So if this deal makes sense right now in this market, make an offer.
Yeah. Yeah. And if you don't get the same level of return, as an investor, that's okay. You want to keep your crew busy. You want to keep them active. You want to have another, have another property going. And maybe, you don't have the great year that you had last year, but you weather through this. And then when the market shifts, then you're ready to go.
Yep. Yeah. Keep hitting the singles, right?
Absolutely. Absolutely.
Yeah. Nick and I mean, we're excited with the market now because you make your money, the most money in a downturn. So we're excited for the deals that are coming. Looking forward to it.
Yeah. Yep. Absolutely. I'm you and I both, from our mouths to God's ears.
Yeah. So we got one more question for you, then we'll get into our 5 to Thrive. So it's the passive road to retirement. So we always ask, what is your advice? What would be your number one recommendation for someone to build a passive income stream?
I mean, you're talking to the wrong guy on the wrong podcast. That you know my answer. My answer is going to be real estate. My answer is going to be invest in real estate, because you can always pull the equity out. There's going to be equity there. You can always pull the equity out for whatever emergency and or college fund or retirement fund, whatever it is. And then if you really want to build some real wealth, you get multifamily complexes. And the other thing is, don't and I say this a lot to New York investors and New York high net wealth people who are looking to try to invest. Step outside of your own comfort zone. Step outside of your market, because there are other markets where that money can expand so much more. Like, go down, we're in New York, go down south, go to Philadelphia. There's great places in Philadelphia where prices are so much less. Obviously you have Florida, different, and not everyone needs to go to Miami. Just south in, Orlando, Brevard County, there are other little pockets where there could be tremendous return. Go to places like, staying in Florida for a minute, Tallahassee. You have 2 huge universities in Tallahassee, Florida A&M that I attended, Florida State. I have friends that are, that have purchased a bunch of complexes for dorms. That's going to be passive income forever. Kids are going to always need a place to stay and don't want to be in the dorms. So just think about that. I mean, I know everyone knows, wants to do the traditional route of 401ks or 201ks or whatever it is, but that's great. But you're not going to find any type of real long-term wealth that way.
Music to our ears, I'll tell you that.
Exactly. That's what I said. It's a look-up question.
Yeah.
So if we're in this room. This is what we're talking about. That's it.
That's right. Exactly.
That's it.
Jeffrey, if people want to reach out to you, how do they contact you?
Well, you can reach me a few ways. I'm on LinkedIn at Jeffrey St Arromand. I'm on Instagram at JSA_sells NYC. I think I'm just about to break the 100K mark, which was a big thing for me.
All right.
Congratulations.
Thank you. I'm not on TikTok, but I need to be. But my team's on TikTok. And then you can always email me directly at JSA@SERHANT SERHANT.com.
Great. So 5 to Thrive. This is our rapid fire question. So I'm just going to ask you 5 words right in a row and just give us the first word or phrase that comes to mind. The only caveat, you cannot repeat your answer twice.
Okay.
All right. All right.
Let's do it.
One, real estate.
Wealth.
Sales skill.
Learned.
Mm-hmm. Networking.
And this isn't one word, but
You can say phrase.
Yeah, you can say
okay. Necessary evil.
Nice. Negotiation.
This is going to sound a little cliche, but never split the difference.
Great book.
Awesome.
Yep. And Jeffrey St Arromand.
Focused, family, and finisher. I try to give you a little alliteration there.
Love it.
Triple F, baby. I love it.
Yeah. Well, hey, Jeffrey, it was great to have you on. Appreciate you being here.
No, absolutely. I really enjoyed this conversation. It was, hopefully other people will get some good nuggets out of it, because I think, this is the opportunity here. This is in these markets, as we all said before, in down markets is when you have the opportunity to really get some more market share and to lend itself to that wealth that we talked about.
100%.